So one more session, 40 minutes of an action-packed conversation about the Just Transition Challenge, which you heard a little bit about this morning. And I am joined in conversation by three colleagues, one of whom will be joining us on the screen in just a minute. But in addition to being the founder of Courageous Capital Advisors, as Kay mentioned, I had the privilege of being one of the lead authors of the G7 Impact Taskforce report that put forward the substantive elements of the Just Transition that really is at the core of the challenge. So it's really a privilege to be part of the conversation today. And I also serve on the Advisory Council of the Impact Investing Institute, one of the co-hosts of our conversation. So here we are, Maria. Welcome, Maria Nazarova-Doyle. So glad you could be with us, and hopefully the technology will cooperate. And Maria is the head of pensions investments and responsible investments at Scottish Widows, and really brings the perspective and voice of very large asset owner in this conversation, one of the founding participants of the challenge. But Maria also has been a leading contributor really across the industry. And pension funds, as we know, are such an enormous part of the effort to move capital for positive impact. And we're really looking forward to your part in the conversation today. Maria, thank you for joining us. Next to Maria, to the side of the television screen, we have Sharon Johnson, who is the Chief Operating Officer at AgilityEco, a leading provider here in the UK of low carbon energy efficiency and fuel poverty services, something that we know is just critically important at this moment in time. And AgilityEco has also been receiving tremendous support from Bridges Fund Management, one of the leading impact investors here in the UK. So we'll look forward to hearing Sharon's perspective on the Just Transition as an exemplar of what we mean by Just Transition investments. And to Sharon's left, we have Anne-Marie Chidzero, who is the Chief Investment Officer for FSD Africa Investments, which is the investment arm of FSD Africa. And Anne-Marie has been a leading force in building financial markets across Africa, and with her capital, really paving the way for other investors to participate in moving perhaps beyond their comfort zone and deploying capital for a sustainable, inclusive world for all. So we have three tremendous conversationalists to join us. But I wanted to, first of all, also say hello to Sarah Gordon, who's watching, unfortunately, on screen today, because Sarah should have been in this chair and I would have been a panelist, but Sarah sadly came down with COVID and is not able to join us today. So I'm wearing a dual moderator and a panelist hat. And Sarah, I think as many of you know, is the CEO of the UK Impact Investing Institute and has been a really leading force in all of the work that you're hearing about today. So just to give a bit of background about the challenge, which you heard from Elizabeth this morning, I just want to unpack kind of three components of the title of this conversation: Just Transition, Finance, and Challenge. Why a challenge? So Just Transition, when we convened as a G7 Impact Task Force last summer, so just about a year ago now, there was a quick, I think, recognition by the 170 plus stakeholders we spoke to about this E and S tension. We were already seeing it in investment products and investment conversations, and there was a recognition that we needed to pause and try to do something about it if we could. There was also a recognition that Just Transition as a phrase was gaining some traction, but it was often used either as a lofty, aspirational expression of fairness or very narrowly in the context of fossil fuel job dislocation. And the feeling was we really need to put something out there that shows what does good look like if we are really advancing a just transition. And that was the impetus behind the work. And so what we came up with were three elements, or we call them three legs of the stool, and that all three need to be present if we are going to say that we are advancing a just transition. There are many activities we can engage in that advance E or S, but we really wanted to show in a just transition what that means. And so we came up with the three elements. The first is advancing climate and environmental positive action, and that can be in the form of mitigation, adaptation, resilience, pollution reduction. So advancing climate and environmental positive action. The second is improving social and economic distribution and equity. And there we're really thinking about not just accessibility, but affordability of products and services. And I think too often we think just about accessibility and not enough about affordability. And there was a recognition there that we needed to shine a spotlight on that element. And the third is community voice. And as Elizabeth talked about this morning, a real pause to say we need to be engaging with, asking, and most importantly, listening to the voices in community who are largely affected and oftentimes invisible to those who are designing both policies and financial products and services. And how can we ensure that community voice is not just respected, listened to, but really influences the way in which we are making decisions around financial products and policies. So those were the three elements. What we discovered in the course of our work is that there's wide application of those three elements to all kinds of strategies. This isn't just a clean energy conversation. It's our built environment, affordable housing, healthcare, financial inclusion. And I think that was really exciting for the participants in the conversation. And then we also realized there's application across asset classes: private equity, private debt, infrastructure, real estate, fixed income, as we talked about earlier today. So that was really the underpinning for the just transition. Finance, we've talked all day long, it's why you're all here, about the important role that capital can play, the gap that we need in investment. And even though we celebrate what investment is already doing, green bonds still represent less than 5% of global issuances, which is, I think, quite surprising, where it's gained a lot of traction, but it's not yet a mainstream default opportunity for investors. Green infrastructure is still only 1% of institutional investors' portfolios on average. And so there's tremendous room for us to dial up finance. And so hence the challenge. And as Elizabeth said today, the challenge really is about mobilization. It's about action. It's not just signing up to some general high-level commitment. It's actually saying we are going to take the three elements, put specific criteria out there. So again, we know what we're talking about, we know what good looks like, and then we're going to challenge ourselves to deploy capital in alignment with those criteria and to satisfy them so that we can actually put the just transition label on these vehicles. I should say not every investment will be a just transition investment, and we all recognize that. But I think we would posit that we hope every investor would embrace just transition investing as part of their portfolio of activities going forward. And I think that's the aspiration. So we have 18 founding participants. I think we are going to put on the screen very quickly the names so you can all see those. I think the announcement came out today, but let me just read them. We have Astart, Blue Orchard, BNY Mellon, Bridges Fund Management, British International Investment, Courageous Capital Advisors, Environment Agency Pension Fund, Fidelity International, FSD Africa, Gresham House, Impact Partners, Just Climate, Leapfrog Investments, Nest, 91, Railpen, Scottish Widows, Schroders, and then our knowledge partner is the Grantham Research Institute on Climate Change and the Environment at LSE. So we're very appreciative of those founding participants, and the work ahead is to develop the criteria. We're actively already engaged in that, and many of you, we hope all of you, will be commenting on those criteria as they come forward. But the point is then to use them, and use them in how we make investment decisions. So let's dig into conversation on the substance, and Sharon, I'm gonna turn to you first. And give us, you are, I would say from what I know about AgilityEco, an example of a just transition operating entity. You are the kind of investment we're talking about. So please share with us what AgilityEco is all about.
Great, thanks for asking me to speak. So AgilityEco has been running since 2013, and since 2019 we've been working with Bridges as part of their Evergreen Fund. We're a company that is absolutely specialist in working with vulnerable customers and those that are in fuel poverty. And that obviously plays absolutely to key priorities at the moment around energy affordability and also obviously net zero. So it's a great space to be working in, obviously very aligned with Just Transition. Financially, we're doing very well. In 2019, our revenues are about 28 million, and we're just edging up now towards doubling those revenues. In the next 3 years, I think we will double again. And I don't think that's a crazy thing to say either. I think we have a huge amounts of funding coming into this space, quite rightly, from government And as an example, one of our funding streams is through the energy company obligation, which is the money we all pay on our bills to energy suppliers, and which is used to upgrade the UK housing stock. And the amount of funding coming into that stream every year has gone up from 640 million to £1 billion a year. And order of magnitude across different funding streams that we are working in is very similar. And do you know what? It needs to be more, because we can't get to where we need to go unless it's more. So just a little bit about what we do in more detail. We have two things in the organisation, really. The first is we speak to customers who are referred to us from a variety of community, local organisations and from energy suppliers. And we talk to them on the phone, and we also have a network of home energy advisors that work locally and go into customers' homes. These people are in abject need of help. They can't pay their bills. They may not understand what benefits they're entitled to. Their houses are probably cold, damp, really badly energy efficient, so they're paying higher bills than they need to. So we're able to go in and conduct an audit of their circumstances and give them small measures to improve their home, potentially make applications for benefits, and refer them into the second side of AgilityEco's business, which is putting them forward for housing upgrades, whether that be fabric improvements in their insulation in their home or actually replacing their heating. So it's a very holistic service, and it's quite a unique proposition where we're able to make a massive difference to people's homes. And I think one thing to call out at this point is we are a private, obviously a commercial company, and I think that it's a really important point that there is a place for commercial organisations to work closely with governments, with local authorities, with charities, to get the right outcome. And we feel that pressure quite heavily, that we need to make a real impact because we are obviously making some money out of the intervention. But I think it's an important point and one we should perhaps talk about later. In terms of stats, I just wrote some down, but if anyone's interested, I'd love you to go to our website and look at our impact report. We saved 545k of carbon. It was abated last year, and that's valued at £200 million. We helped 45k customers through our community schemes, and the average saving for those customers was £7,000 off their lifetime energy bills. We achieved an average fuel poverty reduction for those customers we touched of 251%. And we've calculated that we have saved about £9.5 million, which would have showed up in the NHS in healthcare outcomes, because obviously bad housing leads to bad health. And we're responsible for 757 jobs because of the way we work and the way we're networked nationally. So there's a huge amount of impact which we're able to achieve. I wanted to touch briefly on our relationship with Bridges, because it's been such a positive experience for us. We get great strategic advice from them. We've just completed the investment in a heat pump company, because obviously we need to think ahead. I'm sure everyone will have heard the noise about heat pumps and the fact we need to install something like 30k a month or something to hit our targets. So, we get great advice. They've helped us turn from a small organisation that needed to scale into one that is scaling. They've helped us with data and with technology and with the people side of things. So, and they've helped us focus on the impact that we're having. So that's great, because it helps us target our activities. We won't do that again. But also it helps, it's just a great place to work. I love working at AgilityEco, and I think it ripples through the organisation when you've got staff that know the effect they're having on people. So I think I hope that's a good summary of my company. I'm really, really proud of it. I'm really proud to be working there. I did just want to say, I think that we've got to figure out how to do more of this. Mm-hmm. It's obviously a win. We're a very successful commercial entity. It's a great thing for the people that work in the company. How do we do more of this?
That's the question to the room. That's fantastic, Sharon, for kicking us off, because you are an exemplar of what good looks like in just transition. The climate dimension, the socioeconomic dimension, the community voice, it's where you start with, is really listening to individuals. And I think you also spoke to the role of investors. It is the capital, but it's beyond the capital in the way that Bridges has supported AgilityEco. So thank you for that. Maria, I'm going to turn to you. And hearing that example, a specific example, now zoom out to your perspective as an asset owner, very large asset owner. You've signed up to be a founding participant to the challenge, to the Just Transition Challenge. Can you share with us a little bit why you have done that, and how do you see that as really participatory and directly involved in the work that Scottish Widows is going to do?
Yeah, thank you very much. Thank you very much for having me here and as participants to the challenge as well. Scottish Widows is a very large asset owner, just as you're saying. So we have about £190 billion under management, and we look after pensions and investments for over 6 million people. That's a huge responsibility for us to make sure we get this right. So not only are we trying to build financial security in retirement for these people, we're also trying to make sure there's the future that they can actually enjoy that retirement in. So sort of that dual purpose, I suppose, for us as a large institutional investor. And if you look at pensions, in the UK, pensions represent probably over £3 trillion of assets now. So it's a huge institutional investor and a huge asset owner, when you look at pension funds. They have a fantastic power to actually make things better in so many different ways, in so many different areas. And in the last few years, pension funds have had a lot of attention dedicated to climate change. But they've particularly focused on and there's been a lot of collaborative engagement with bad performers. There's been a lot of exclusions being introduced on things like thermal coal and tar sands, and other polluting industries. We've also seen massive improvements in carbon reporting. UK pensions are world's first in terms of mandatory TCFD reports. So huge progress just in the last few years for pension funds when it comes to E of ESG. But unfortunately, the same attention hasn't yet been applied to the S side of the equation, and particularly when you think about the net zero transition, how that social implications will underpin the net zero transition that we so desperately need. So things are hopefully changing a little bit right now. The government has a lot more focus now on S, and pension funds are starting to realize that actually, if they don't treat the social implications of net zero transition as kind of as high up as they do with the carbon implications, that they might not be exercising their fiduciary duty properly, and they might be sort of liable for those bad outcomes. So things are starting to change slowly but surely. In terms of why pension funds should even care about it, well, I don't think that net zero transition can actually happen if we don't take people with us on this journey. So in the end of the day, it has to be delivered by people. So if we create policies that don't really take account of implications for workers, implications for communities in different parts of society, if we just focus on kind of carbon accounting, on the numbers on the spreadsheet like that, and we don't think about socially responsible policies when we come to this massive shift in the energy transition, then it won't be successful. It just simply won't be successful. We will have disenfranchised groups of population that will find political representation that will quickly stall any positive developments that we might have seen already in terms of decarbonization efforts. So it's very, very important to get this right and to make sure we address kind of people and planet at the same time. It's not one over the other. You need to bring both together to make sure that it works. In terms of why just transition is actually so important, it's not just that, because that's obviously quite existential. We need to make sure the transition is just so that we actually have the energy transition. But if you think about specifically pension funds, number one, the just transition is the right thing to do. Most pension funds have actually signed up to lots of different policies. They have ESG policies. They have their investment principles that include kind of ESG considerations. So they've actually put out there their commitments to E, S, and G, but they probably haven't actually done much on S so far. So it's absolutely the right thing to do for them now to just put the money where the mouth is, put the effort where the policies are, and implement the S focus alongside all the other activities that they're doing. But the just transition is not only the right thing to do, it's also the necessary and the smart thing to do. And in terms of it being necessary, it's all about managing systemic risk. So pension funds are universal owners. They can't diversify away from the systemic risks and the social costs of the failed transition, if we come to the point that transition fails. So they might as well do something to manage these risks now rather than just, sit back and be the taker of all the risk and all the cost. Because if we are unsuccessful in the transition, all the risks will materialize. So everybody's sitting there modeling, potential climate change implications and risks. But if we fail in the transition, these risks will become real. So their asset values will be affected, the returns will be affected, the ability to pay pensions will be affected. So again, might as well do something now and try to manage and reduce that risk. And in terms of it being the smart thing to do, it's all about investment opportunities. Just a fantastic example we heard about just a minute ago. There's so many companies that are doing fantastic work. And if they manage both E and S impacts together and they manage those successfully, they represent fantastic investment opportunities, which again, for pension funds and other responsible asset owners and investors, it's just a massive win-win. So why not try to find those opportunities and support them to try and improve on your portfolio outcomes? So absolutely a win-win situation. And why we joined the transition is, obviously all of these benefits are fantastic. It's very, very difficult right now to invest in a fund that is aligned to just transition. So as far as I can tell, there aren't even any funds specifically. It's quite hard to find them, and if they are, they're not mainstream. They're really quite niche and they're difficult to find. So there are obviously those investment opportunities as companies, but for an asset owner, it's very hard to decide, well, which asset manager and which fund invest in to make sure that you get the most alignment with the just transition and you invest in to actually bring about the just transition and help promote it. So designing the label is what really got us interested in joining this transition, this just transition finance challenge and the working group. So I think it will be very important for us as an asset owner to have the transparency, when we choose investment products, but also, use whatever knowledge we have on the subject to try and collaborate with others and create those labels that will be useful, that will be applicable, that we can all have that better transparency, better understanding of where the capital is flowing. And hopefully many other asset owners and pension funds in particular would then look at these and say, well, actually, I would quite like to have some of these investments and some of these funds that are labeled for just transition in my portfolio. And as we've just been discussing, it doesn't have to be the whole portfolio, but, we can allocate money to this and we should allocate money to this. And after all, where the money flows, things actually get done. So hopefully if we get this straight kind of road, towards investing for just transition, for enabling just transition, we will actually see capital allocation shifts, which will see the just transition being supported.
Fantastic. Maria, thank you so much. And it is about shifting capital, and you went right there in your description, so thank you so much. I also appreciate that you called out both the risk and the opportunity approach, because for some investors, the starting point is looking at risk, whether it's systemic risk or market risk or community risk, risk of performance risk, reputation risk, and that's really important, so I appreciate you going there. Also the opportunity set, because a lot of investors are also seeing when they begin to look, maybe they start at the risk lens, but when they begin to look, they see tremendous opportunities for new investment activity, and thank you for talking about both of those. And I really appreciate your comment that carbon accounting without community engagement isn't going to get us there. So we really do need to ensure that we're engaging with communities. So fantastic, Maria, thank you. And the last thing I would say is what I really appreciate about Scottish Widows putting your early commitment into the challenge. You are absolutely suggesting to the marketplace, we want to see more product that actually can demonstrate that it is delivering on a just transition. So that appetite to see more product come to market, you're really encouraging with your participation. So thank you for that. Anne-Marie, I'm going to turn to you. So also an investor sitting on the continent of Africa, a different position in some of the investments that you look at. Why have you joined the challenge as a founding participant?
Okay, great. Thank you very much. And thanks. It's lovely to be here in the UK. Maybe let me just start by explaining who we are. So FSD Africa is an enabler in the financial market. We're funded by the UK government through the Foreign Commonwealth Development Office, and our purpose is to make finance work for Africa. How do we do that? We do that by engaging with the different stakeholders within the financial sector, whether it's the policymaker, governments, the financial institutions, the clients, the community. We engage with them around advocacy, capacity building, knowledge sharing, around specific issues that concern us. And really what's concerning us now is how do you equip Africa's financial sector to finance its green economic growth that has an impact on people and planet. But in addition to that, and that's really the beauty of our organization, is that we drive that change by actually putting some capital on the table. And so it's all very well to think about the data, to think about best practices, to build capacity of regulators, but we want to be able to demonstrate that change. And so we have a unique value proposition to potential partners, and that we have the ability to take risk, so early stage risk around new structures, new financial products, new instruments that will fill a gap in the market but drive more capital for this just transition. So the just transition is very intentional in what we do. So it reflects through our investment policies, it reflects in the way we identify pipeline, it's reflected in the way we structure our deals, and it's reflected in the way the deals are approved. So the board has this as really a core element for their own decision making. We're seeking a financial return, so we're doing this commercially, but very importantly for us is that we're seeking that impact. And the impact is really measured around 3 areas, and it's very similar to the just transition, and I happen to be on the working group, so hopefully contributed some thoughts from the African continent. But it's around 3 core areas. So first, economic. We are trying to drive finance for jobs and for improved capital flows to the continent. And within the continent. And so this whole issue of risk and opportunity is something that we embrace, and that's why we try to demonstrate the impact and how you manage risk. Secondly is the social. We invest in financial solutions that not only increase the access of finance to people and businesses, allowing them to manage risk better, particularly climate risk, and to adapt to climate change. But we're also investing to increase access to affordable housing, to health services, and to social infrastructure. And thirdly, and importantly, is we do this with a sustainable futures outcome. So what does that mean? We're trying to drive change in the financial sector, and we measure that by reductions in CO2 in the investments that we make. But just really the ability of people and businesses to adapt and manage changes in the environment and in climate, and really realize that green economic growth that Africa needs to drive for and hopefully can leapfrog into. So why have we joined the challenge? I mean, I'm just going to keep this very brief because I'm sure you have a lot of questions. Why have we joined this challenge? It's because we believe that we are in a unique position to partner with asset managers and asset owners and capital owners from the City of London in actually investing or structuring financial funds, new instruments. In fact, I'm here on a due diligence with a fund manager. So we want to be part of this because we think we can help you. We're looking for partners. We can provide knowledge, data as we do our investing. We do collect that data. Work very closely with my colleagues on that. We've just launched the Africa National Capital Alliance. So we're in a unique position not only to invest alongside with you, but also to provide that data that will better inform the risk and the opportunity.
Fantastic, thank you, Anne-Marie. And so if Maria has appetite for new product, you also have the appetite to put some of that capital in, perhaps to de-risk in some situations or to push people beyond their comfort zone to be part of the solution set in some of these vehicles coming to market. So I want to start with, we have about just under 10 minutes for questions. I want to start with you actually, Anne-Marie. We talk about just transition sometimes, you know, UK, emerging markets. Is it really that different? Is it more similar than it is different? Share with us your view on that.
Thank you very much for that question. I was listening early on to the previous panels, and you know, the conversations are conversations we have on the continent. When you talk about affordable housing, these are issues that we're grappling with. Perhaps the magnitude of the problem is bigger because you know, we need many more houses. So I think the conversations are very similar. Access to, you know, proper water, to you know, even heating or air conditioning, you know, different solutions for renewable energy sources, et cetera. So yes, the conversations are very different. The magnitude is as I say, a lot higher. You know, there are other risk factors in terms of just the financial sector's capacity and ability to channel those financing instruments, and that's where we intervene, as we're really trying to build that capacity to develop new products and new institutions in which this capital can flow to address these problems.
I mean, that was definitely one of the observations of the task force from investors from, as you heard from Elizabeth, 38 different countries who said it is more similar than it is different. But of course, how we assess the risk across the globe can change depending upon where we're sitting as an investor. And we were also very grateful with British International Investment. I know Nick O'Donoghue was here earlier today as the UK DFI to also sign up and be part of the challenge, because the participation of a development finance institution in the structuring point, Anne-Marie, that you mentioned, sometimes can also give confidence to other investors to participate. I want to turn now to community voice. We've talked that third leg of the stool is something that increasingly people are enthusiastic about, but also openly they're a little hesitant on how. How do I do this? I understand why it's important, and perhaps I've become increasingly aware of why it's important over these past 18 months to 2 years, but I'm a little hesitant sometimes, especially as an institutional player, how to do it. So Maria, I want to come to you first. How do you think about community voice, and are there some things that you have either experimented with or seen in some of the managers you've invested in that have actually moved the dial? And then Sharon, I'm going to come to you on that as well.
Thank you. I think that's probably one of the hardest nuts to crack, to be honest, you know, so that's sort of not the usual way how, you know, assets are normally invested and decisions are made. And that's exactly where the problem is, isn't it? So because we don't normally take community voice into considerations, generally as an invested industry, we don't really listen that well. But if you think about it, you know, women are the most affected by climate change, and then they're hugely, severely underrepresented when it comes to making decisions. Indigenous communities, you know, local populations, they're affected the most, and yet we don't tend to listen to them when it comes to devising solutions, you know, figuring out how to combat climate change. So we absolutely need to make sure that we're a lot more inclusive when it comes to decision making, because then we will be a lot more successful. But frankly speaking, I've not seen a lot of examples from the fund management industry when it comes to that. Possibly because we're mostly a public market investor, and that's the area where definitely that's not been much progress. So from what I understand in private markets, there's been a lot more movement on that, you know, so when decisions are being made, you know, in private markets, it's easier to implement. When it comes to public markets, that's a real challenge, which again, I hope that the Just Transition Finance Challenge will help sort at least moving towards some more inclusivity and some more kind of place where we can take community voices into account as well.
No, thank you so much. I appreciate the candor, because I think we all do recognize there's a level of effort required to do this well, but we have to have the commitment to actually engage in it. And I also appreciate your distinction between the public markets and the private markets. And I think as the task force worked together, some of the examples that we saw more readily, the co-design, which is something we heard about this morning, that was in a private asset class, not as quickly as in a public asset class. The survey instrument, really ensuring that we have the pulse of the community where our capital is flowing, on not just on an upfront basis, but on a regular basis. Governance, putting representative voices around the governing tables of vehicles. We're seeing more of that, and I think it's fair to say, Marie, we're seeing more of that so far in the private markets, and hopefully that can influence some of what we're learning and apply in the public markets. Sharon, how about you on the community voice? I mean, obviously your business is embedded in community, but what have you thought about, and are there suggestions you would have to investors of how they could think about engaging with community voice more effectively?
Yeah, I could just bring a sort of a live example to this. I think, just by the nature of energy efficiency, which obviously the business I'm in, everything's fragmented. There are lots of little businesses, there are lots of different localities that have got different needs, there are many different types of customer that have got different needs. So how do you develop something which as a business is going to serve those needs in an efficient way? And one of the collaborations we have is with Portsmouth City Council, and they are a very forward-thinking organisation. They have their contacts on the ground of the local charities, third sector organisations. And we have a programme running which is 90% more effective in Portsmouth than the rest of the UK, because we have managed to make that partnership work. So I think it just comes back a little bit to what I was saying earlier. I really believe there's a place for commercial companies to partner with other different types of organisation, including central government, to get to a really good outcome. But I think, it's not one size fits all. So.
Right. No, and I'm glad you brought partnership into the conversation, because I think it came up in a couple of the conversations this morning, and I know, Anne-Marie, it's central to how you come at the work, because this is collaborative. It does require multiple parties, whether it's at an individual investment vehicle or a broader market shifting activity, but smart partnering, effective partnering, it requires real attention and effort. So, Anne-Marie, what are your thoughts about community voice, or on the partnership point, if you wanted to amplify?
I mean, it's obviously very important, and I'll give you an example of South Africa and their just transition. They have to talk to community. Their current sources of energy produces a lot of employment for people, so transitioning out of coal into other sources of energy has a serious economic impact, and they are engaging very strongly in a consultative process with community, so community in terms of labor, but also the other stakeholders, the financial sector, the builders of new institutions, the sort of small business organizations, et cetera. So it's important to really engage with all those stakeholders as you think about this transition. Also, just by the nature of the financing that's happening on the continent around early stage companies. Last week I was attending a climate resilience fintech summit. And you have a lot of entrepreneurs who are listening and who are producing products because they understand their client base. And these are, whether they're poor households, low-income households, whether they're women, vulnerable groups, they are listening and producing solutions and products that can solve those problems. So community is very important.
Fantastic. We have just a minute left. I'm going to do a quick final round, very quick. Maria, I'm going to start with you. We reconvene a year from now. What do you want to be able to say about the Just Transition Challenge?
Well, I want to be able to say that we now have a lot of funds operating under this label, and we have seen money actually being allocated to these funds. A year is short, but also long enough to do this. I think we can do this.
Money allocated. I like that. Fantastic. Thank you. Sharon?
I'd like there to be more organisations like mine out there that are working with organisations like Bridges.
More AgilityEcos and participating. Thank you. Fantastic. Anne-Marie?
I would say partnerships and new fund structures that we can announce, that are doing a just transition, have a strong just an investment framework.
Fantastic. And I'd like to say every institutional investor and asset manager participating in our next summit would have at least one just transition investment in their portfolio. So as Elizabeth said this morning, the criteria are being worked on actively. They will be shared openly. The ask to the room is to engage and to contribute, and hopefully then ultimately to use the criteria in your own investment activity and investment decision making. Just transition, as we've talked about all day long, the integration of environmental and social objectives is critical wherever we sit, whatever country we're in, whether we're looking at global investment vehicles, regional, local, and the time is now to make sure that we're putting our money to work in accordance with what we say we care about. An inclusive world is necessary to have a sustainable world. So please join me in thanking our tremendous panelists. And you will have a break for lunch, but first, we have a short video from the Global Ethical Finance Initiative. So if you would just stay seated to enjoy the video, and then immediately afterwards, lunch is just outside the door. And for those watching on the streaming, we'll be back, I think, in just under an hour. Thank you so much.
The SDG's Financial Products Platform showcases commercial financial products that are directly aligned to the Sustainable Development Goals.
The platform's aim is to facilitate the development of innovative, SDG-aligned financial products across asset classes that ultimately build the ecosystem of SDG investing.
We know that private sector-led solutions are required to deliver the SDGs, but in a market of virtue signalling and champagne stewardship, it is difficult to discern which products are truly aligned with the SDGs.
The SDGs provide an opportunity for financial institutions to embed people, planet, and profit in their products.
The world of ESG is full of jargon and fragmented approaches currently, and focusing on something that's been agreed and in place since 2015, sponsored by the UN, to direct our thinking and analysis around investment and to measure the outcomes of how that investment is performing, gives us a real strong platform to make progress and to enhance people's savings with some benefit to the world. We're incredibly pleased to be part of the Global Ethical Finance Initiative. We believe that the work we have done around sustainable sovereign bond investing merits a broad audience, and GEFI gives us that broader audience than that which we could achieve ourselves.
The platform is open to applications from new and existing financial products representing leading market practice across different asset classes.
Products listed on the platform must be of significant size, ideally in excess of 100 million, and scalable. Platform partners must demonstrate genuine commitment to the SDGs and be willing to share their experiences in the product development cycle.
The SDG Financial Products Platform is the result of a collaboration between the Global Ethical Finance Initiative, or GEFI, and the United Nations Development Programme.
The platform is open to applicants that can demonstrate an alignment with the SDGs. GEFI undertakes detailed, extensive sustainability-focused due diligence and only selects partners that demonstrate a genuine authenticity and dedication to the 2030 SDG agenda.
We work in collaboration with partners through the product lifecycle to share learnings and highlight leading market practice. This is done in 3 ways.
Showcasing. Partners have the opportunity to share insights on their products at our global flagship events and co-develop thought leadership shared across our international network of over 15,000 global financial professionals.
Enhanced authenticity. Partners benefit from additional product endorsement through the unique collaboration with an established NGO.
Technical expertise and knowledge. We meet quarterly with the partners to share insights on market developments that help refine the product strategy, and we use GEFI's proprietary SDG framework methodology that utilizes the 160 plus targets and 300 plus indicators to intertwine them within the investment thesis.
GEFI and the UNDP launched the platform at COP26 with the platform's first core partner, Aegon, and its Global Sustainable Sovereign Bond Fund.
So I'm delighted that Aegon UK and Aegon Asset Management have partnered with GEFI in the launch of the new Aegon Global Sustainable Sovereign Bond Fund. And I'm proud that we've invested £100 million of one of our key default funds, the Universal Balance Collection, into this fund.
We try to invest in those countries that do show right now best practices in terms of sustainability when it comes to regulation, but also we try to identify those that are doing the best to improve in the future. So not only current leaders, but also future leaders. Well, the main attraction to invest in sustainable sovereign bonds is that you achieve long-term resilience. So you're able to protect capital, but as well find sources of yield and performance for the future. And also you will construct a portfolio that will be resilient under different scenarios, including extreme climate scenarios. We expect those countries to perform better just because they are today investing in solving these issues for the future.
If you are committed to achieving the SDGs and are interested in having your product promoted on the SDG platform, please get in touch with Jeffy.